Defense wins championships.
Well, I'm the best corner in the game. When you try me with a sorry receiver like Crabtree, that's the result you're going to get.
Berkman back up on the terrace. And did he hang on? I believe he did. He did. He did.
And now the hash marks as it's dealt back in and sent across. Oh, it didn't go!
Be consistently profitable in the stock market. You have to know when it is time to get stopped out of your trades. And to continue on the back of our sports metaphor, everyone loves the home run, the touchdown, the goal. That's sexy, that's fun. But if you don't have a good defense, you're not likely to make it far. Same thing in the stock market. Everybody loves to study when to enter trades. But if you don't have decent exit strategies, you will not consistently make money trading stocks. Now, there are two major models that trading strategies are built around, either continuation or reversal. And each one of these different strategies have a very different rule set for profitable exit strategy. So in this video, we will cover both of them. First, obviously, we're going to talk about continuation. So in this instance, we have our entrance simply set up as when the RSI indicator crosses above 50. Then, of course, we have conditions for either stop loss or take profit, as you do in most trading strategies. But I want to touch on this take profit condition first, because it's not actually a condition that sells into strength. It is simply a trailing stop. The idea is that when buying strength, when buying a stock that's already showing strength and looking for a continuation, we aren't looking to limit its upside. I want to let this thing be strong for as long as it can be strong, and then obviously get stopped out on the first sign of weakness. So our take profit condition is the current bar's low closes below yesterday's close minus yesterday's average true range value multiplied by 2. If that doesn't make any sense, let's come out to the chart. I promise you it will, because I also have these exit conditions plotted on the chart. Our profit condition, of course, is this cyan line here. So the ATR, the average true range, that is this indicator you're seeing at the bottom of my chart. That simply, okay, thank you, EA Play. Do I have to redo this clip? Okay, sorry, I'm back. The average true range, what this indicator is measuring is the average distance between the high and the low of each candle over the last 14 candles. So how volatile has the stock been over the last 14 trading days? That is what this is measuring. And I love using this indicator to build exit strategies because it will widen your stop loss when the stock is more volatile. Hey, this stock is volatile. Let's give it a little bit more room to breathe. And it tightens up the stop loss when the stock is less volatile. Hey, this thing is sort of chopping. We can tighten up that stop loss. We don't have to let it run down so far much on us before we get out. So anyway, on the day that we exit at the close of this candle, the previous day close was 152.86 and the ATR value was 8. So if the next day's low is 152.86 minus 8.01, we would get stopped out of the trade. The low on this day is 134. Of course, breaking below that stop loss, so we get out on the close of that day. That is how our trailing stop profit target works on our continuation strategy. Now, let's talk about the stop loss, because guess what? Sometimes you're going to get in a trade and it's just going to fail. That's part of trading. It always will be part of trading. There will never be such a thing as a strategy that always wins. So let's take a look at our stop condition. Very similarly, this time we're taking if the current bar low closes less than from our entry price, rather than where the stock is currently trading, where we got into the stock minus the ATR value of the previous bar. And this time, not any multiple. I actually should have mentioned that in my math on the trailing stop, that it had to be 8 times 2, right? I kind of forgot about that. Sorry. But notice this time we don't have any multiple on the ATR. This is also plotted on the chart with this sort of salmon colored line. So our entry price here is about 242.19. On the bar prior to our getting stopped out, the ATR is sitting at 16. So if the bar closes 242 minus 5, 8 minus 16, if we close or our low touches below that, which in this case it does, as the low of this candle is 222.56, then we get stopped out of the trade. I want you to note something. We also get stopped out of this trade here. But this sort of sucks, right? I mean, we buy, this stock rips up 21%, and then it comes down and stops us out. That's not fun. This strategy still makes money. It's a nice and profitable strategy. This is, of course, just one ticker, but if we flick through the alphabet, A, up $22,000, B, up $32,000, C, up $46,000, D, up some money. This is the way I like to randomize my back testing, just by going through the alphabet. This is a profitable strategy. It seems to be. Of course, I would need to do a lot more in-depth back testing, but I like the way this strategy looks. But let's see in real time here if we can't fix this. Stock runs up 20%. Even if it does pull back, I would like to be locking in profit. I would like to not end up losing money after a stock goes up 20% after my entrance. So what I've done is I have amended a statement onto our stop condition using the OR operator, which means now if either one of these statements is true, we will be stopped out of the trade. The statement that I amended onto our condition here is that the percent change study is less than -10. The default length of the percent change study is 14. So what this is looking for is, hey, is the current bar closing 10% or less than it closed 14 bars ago? If we go ahead and back out of this, hit apply, back out of this, you will see now, it's still not fun. It still rides up. It still rides up that 22%, and then you end up only locking in 7%. But is locking in 7% way better than watching it go up 22% and then you end up losing 4 or 5%? Yes, of course, it's way better. And you notice the P&L now sits at $36,700. I believe this statement added $4,000 to the P&L, if I remember correctly. And I don't remember off the top of my head all these alphabet P&Ls, but A is now up 27.2, B is now up 34.1, C is now up $40,000, and D is now up whatever it is, $8,000. So you can see now that this sort of added statement looks to be helping this strategy. And why did I do that? I like to show sometimes real-time code optimizations like that in my videos because we just noticed in real time, hey, this is not fun. Watching the stock rip up 20% and then still end up losing money is not fun. So let's try to fix that. It took me 10 seconds to amend this statement onto my stop condition, and now I get all of this data immediately collected for me across all of those tickers we just looked at, A, B, C, and D. I don't have to spend hours and hours going back through every time I want to make a code optimization, recollecting the entries, recollecting the exits, performing all the calculations. And I can also see visually on my chart how ugly it was when this stock was up 20% and we ended up losing 5%. Codifying your trading is so important. It's helped me so much become a profitable trader. It's what we do on this channel. It's what I'm trying to help you all achieve as well. Anyway, off the rant. Let's move on to the next exit condition. If you're interested in easily importing this strategy, this custom study that performs your backtest calculations automatically, this volume custom study, any of my custom created scanners, I have over 70 different codes available over on my website, daytradingstrategies.net. All you need to do is come into the strategies after signing up, of course, and you can choose strategies, scanners, studies. All you need to do is copy the share link that is available in all of those different code types back within your Thinkorswim setup, open shared item, paste in that link, preview, and import. Then they will all be available from your studies or your strategies or, of course, your scan columns, depending on the type that you imported. So check out daytradingstrategies.net right now. There's a link in the description down below. Moving on to our reversal exit strategies. I'm going to maybe shock you here. The base, at least that we're going to start this conversation with, I only have one exit condition. I don't have a hard stop built in when I am building my reversal strategy. We're going to buy when the RSI is less than 40. We're going to simply sell when the RSI is greater than 45. The target goal of a reversal trading strategy is a very high win rate. Now, win rate and risk reward. You must multiply these two things together in order to build a profitable trading strategy. One means nothing without the other. You can have a 90% win rate and lose money. You can have a 5-to-1 risk reward and lose money. They both must mesh together. And I'm not here to burst any dreams or to burst anybody's bubble, but I keep it realistic on this channel. There is no such thing as a strategy that has a very high win rate and a very high risk reward. It just doesn't exist. At least if it does, it's a golden egg and the efficiency of the market is going to quickly get rid of it. So your job when building codified trading systems is to play that seesaw game of measuring your win percentage and your risk reward in order to find a profitable edge over the market. You'll notice in my reversal strategy here on SPY, we have an 81% win rate, but our average win is 165, while our average loss is 340. I've just quickly loaded back in our continuation strategy that we had built previously, and on this same chart has a win percentage of only 35%, but its average win is $472, while its average loss is $185. And if I could just expand on that for a moment before we hop back into our reversal exit strategy here, that is so vital to understand. It's so important when you're going to build a trade strategy that you pick, is this going to be a continuation strategy or is this going to be a reversal strategy? Am I going to be looking for a high win rate or am I going to be looking for a high risk reward? I feel like too many people get into trading and try to build strategies with both. And what ends up happening when you do that is you get stuck in this middle ground of a strategy that's trying to accomplish both things and ends up just being largely break even. How many of you out there have been a break even trader for years? I went through a 2 to 3 year period where I was a break even trader. I think that's a very common step in your trading journey. If you're there right now, it's probably because you're not building your strategies correctly. And that's not to be rude. It's just you're trying to build the perfect strategy when it doesn't exist. Your goal is to build a playbook of strategies. You should have some continuation strategies with a low win rate but high risk reward. You should have some reversal strategies with a high win rate but low risk reward. And if you mix these strategies together in your playbook and you trade them all at the same time, that begins to build consistent profitability. It can't all be done within one single strategy. Anyway, let's talk secrets of the reversal strategy. Luckily for you all, you are watching content of someone who's been now building these codified trading strategies for 3 or 4 years. So I know how to make this strategy even better. And I'm just going to impart that information onto you now. The first thing I'm going to do is I'm going to plot a simple moving average with a length equal to 200 on my chart. This isn't going to change the strategy. I haven't changed my buy or sell conditions at all. I just want the 200 SMA on the plot because now I'm going to change my buy condition. This time I'm going to use the operator and, meaning the statement on this side and the statement I'm about to come up with must both be true in order for our buy condition to be true and for the trade to enter. The current bar must be closing above that MA variable that we just initialized as the 200 simple moving average. So the RSI less than 40 and the the close above the 200 simple moving average. Now, I think that actually made our total P&L go down a little bit on this ticker. We're now up $7,500, whereas before, if I could properly delete this, we were up $13,700. But this is on 193 trades, whereas our 7,000 is only on 97 trades. And that's better. I want you to understand in backtesting that is better. Making money on less trades, increasing your average win is extra profit. And not to mention, right now, we're looking at an S&P ETF, which is basically gone straight up. If we go back to this block chart, this is one that I love to test strategies on because it has both a big move up and a big move down and periods of consolidation. This is a chart that includes a lot of different market structure. If I were to come in now, you can see we're up $7,100 on 18 trades. If I were to get rid of this close above the 200 MA condition, you'll now see we're actually only up $183. Basically, not a profitable strategy anymore. So the close over the 200 simple moving average really helps in a reversal strategy so that we're not catching the falling knife. We're buying dips, but we're buying dips on strong stocks. Let me teach you another potential secret you can utilize in your reversal trading strategies. You've heard of scaling out of positions. If it goes up X percent, sell 50%. Another X percent, sell 50%. Another X percent, that's where you exit your full position. Well, I, on my reversal strategies, like to scale in to positions. So enter multiple times and when the RSI is less than 40 and above the 200 simple moving average. So in our strategy, we are currently taking $10,000 positions. What I'm going to do is make that only $1,000 positions, but in our global strategy settings here, and I'm going to have to back out for some reason it does this. In our global strategy settings here, I'm going to allow up to 10 orders regardless of the entry that generated the order. So now, any time that, once again, the RSI is below 40 and above the 200 SMA, up to 10 times, the strategy will enter. And you'll notice here on Tesla, this is a chart I also love to test on because it's very volatile, rippy, up and down. The win percentage just went from something like 78% to 94%. The total P&L did go down. I think we were up like $9,500 before, but total P&L might be the least most useful statistic when running a backtest. This win percentage and your average trade P&L are so much more important because now winning at a 94% rate rather than a 79% rate, we can add capital to our positions faster. The higher your win rate is, the more you can consistently make money, which means that, hey, I made money here. So next time I'll add that money into this position. I made money again. Next time I'll add that money into this position, right? So you're not taking 1,000 positions here, 1,000 positions here, 1,000 here. Maybe you're taking 1,000 here, 1,400 here, 1,800 here, 2,200 here. Does that make sense? As your win percentage increases, your scalability of your account increases, which will lead to faster growth. Like if you learned something, subscribe if you would like to learn more. And both of the strategies that we have built today are available for import over on my website, along with this custom study that automatically does your backtest calculations. This is a very impactful study, along with 70 other, be it strategies, studies, scanners, watch list columns, etc., all for one low price over on my website. Link in the description down below. Go sign up and become a better trader today. With all that being said, I'll catch you all in the next one. Oh. Rock.